Good day everyone. On this video, I'm going to be talking about inducement liquidity. So I posted these screenshots on X explaining my inducement logic. But let me break it down to you under 3 steps. The first question is, what is inducement? Inducement is just liquidity sitting above or below our point of interest. Can be our supply zone or demand zone or order blocks or breaker block or whichever. So one thing, the logic behind inducement is understanding that for us to buy, we need somebody to sell to us. That's just the logic behind inducement liquidity. Meaning, let's say we're trying to buy, right? So we need to understand that there must be somebody's stop ready to be taken out of the market for it to trigger our point of interest. Meaning this person is selling to us for our buy position to be ignited to take on high probability setup. And vice versa, when we're talking about sell setups, we need somebody to sell to, so we need someone to what? Buy. We're willing to buy from somebody that just got stopped out for us to take our high probability setup. All right, that's just the core understanding behind what inducement actually is. Now, what is the core idea behind it? So just wrap around it. You found the zone that broke structure, meaning you're trying to look, let's say you're trying to buy, all right, and then you ask yourself, this area I'm trying to buy from, is there a low? That's a constant question you're meant to ask yourself if you're trying to take a buy position. Is there a low right just before my buy point of interest? If yes, that means that zone has higher probability of holding. And if not, just understand that that zone is relatively weaker and price might dig lower than the point of interest to seek liquidity. Which also means that your point of interest might actually be the inducement for the valid point of interest. So the question is, where should your liquidity be? So different ways inducements will actually form. A lot of different ways inducements will actually form. They can form right like this. Like we said, from our core idea, we need to find structure that broke, right? So the first thing to understand is there must be a break of structure in line with your structure. Structure must break. If you're looking to buy, you need to look for bullish structures for you to actually buy, right? And then we're looking for a false low. We're looking for a point of interest. Let's say our point of interest sits at this low, right? It can be your order block or thereabout. We need a fake low. Now, how do we know that this low is valid? Number one thing you need to understand is price must first break structure to the upside. We have a lot of people that tell you price must move at least 50% or thereabouts, which is also very valid, and price is coming back to come and trigger your point of interest. Now, a little tweak to this particular one is there's a break of structure to the upside. Let's say this is your 15 minutes time frame, and then this is your point of interest, right? The first pullback. Now, how do you know that this small pullback is a valid inducement? Let's say it's not up to the 50% of it. I think it's a valid point of interest. You scale down to the lower time frame. Let's say the 3, the 5, or even the 1 minute, to look for price to break, look for areas where price actually broke structure to the upside. Now, that signature already tells you that some people believe that structure is now bullish, all right, and they're trying to buy it already. So that break of structure to the upside validates this inducement. I want to see price come back into that point of interest and then buy into buy side liquidity. That's another valid way inducement can form. Another valid way inducement can form is right before that break of structure, right before price broke above this high, price forms a fake low. All right, this also can serve as a valid level of inducement. A lot of people might be buying from this area, believing this is a valid zone. Meanwhile, price sits majorly below this level, and then price will come to take out this liquidity, and then that point of interest will hold. These are the most popular ways inducement can form. Also, inducement can form as a form of price might break structure twice, and then you have your valid point of interest sitting around this level. Most of the times, a lot of people get trapped in this area trying to buy early. Once you understand is follow the higher time frame order flow and be on the right side of price. All right, so let's go run through some examples of how to go about this inducement level, and let me show you how I implement them into my trading edge. So the first thing you need to understand when going about trading your inducement is, number one, you need to understand your exit point. So the first thing I have here is my area I believe I want to exit the trade. So how do I trade in line with to that direction? The first thing I need to see is I need to see a break of structure in that direction. So the first thing you need to understand is there must be a break of structure in that direction in which you want to take your high probability buy position. Look at this, we already have what our break of structure to the upside, and then relatively you can also find a very small order block sitting in line with that trend. So we have our draw liquidity and we have our point of interest. So the last thing we're looking for is what? To look for a valid inducement, right? So what we learned? Now we need a very good pullback, and this already I've already handed us a very good level of push down and then a pullback up. These are already a valid level of inducement. A lot of ways inducement actually form on your chart. So to actually do so validate if you're actually dealing with a very strong valid point of interest, you can change to the line chart and then you can see how the inducement formed very well. Then go back to a candlestick chart just to keep it as simple as possible. That already validates the zone. What's happening over here is we're already seeing that you have resting liquidity for price to actually buy from this particular level. Our stops can come below our point of interest aggressively. Then we're targeting our exit point. All right. So you can see price take order inducement, good reaction, and then price triggered our level. Again, if you want to hop on this trend in continuation move, again we need to see a break of structure above the previous high, and we're going to use that same area as our daily range to buy into the upside. Again, we already have another valid break of structure. Again, all we have to do is to look for another valid point of interest, in which we've already found one. Again, this order block sitting at this level, very clean order block. Expand that, and then again already price has broken above that high. Like we said, make sure we have a valid break of structure first, a valid pullback, and then we're targeting that exit liquidity. Again, I'll take our long position at this entry order block. A stop loss can come aggressively below or below this zone, but below this order block is also valid. Targeting our buy side liquidity. This is quoted for a take. So far, I have our valid inducement. Price, in fact, did break structure. These are the points whereby you have those strong break of structure higher, meaning price broke structure twice, and then your point of interest sits below those areas. I want to see price trigger our point of interest, as you can see over here, and then we expect that zone to hold up into buy side liquidity. So that's a very simple logic in understanding the idea behind inducement. I guess you guys understand how inducement work, and I'll see you guys on the next one. Yeah, boss.